All right, so welcome everyone. This is Bronson. Really excited to be here. I have a good friend of mine, Dana Samuelson, who is an awesome guy and just really does a lot within the precious metal space. And some people ask me, Bronson, you're a real estate guy. Why do you talk so much about metals and inflation and all this stuff? And there's a huge reason for that. Is because I think that it's really important that we don't just think in terms of real estate or stocks or other forms of investment, but really that we talk in terms of wealth preservation, inflation hedges, and really what wealth really is. And so there's a huge history, 5,000 plus years of metals, gold and silver being money. And so Dana is just a great guy. He basically runs American Gold Exchange, which is a dealer of precious metals. And he worked actually at one point with Jim Blanchard, who was really instrumental in the U.S. He basically got gold ownership legalized again in 1975 after it was illegal for over 40 years in the US, which a lot of people don't really know. But he also was the president of the Professional Numismatic Guild, which really is a nonprofit that deals with special coins that have value in their heritage and the specific vintage and stuff like that. So he's going to get into a little bit of his background, but really excited to have him here today. So Dana, welcome. How are you today?
Thanks for having me, Bronson. I'm doing great. It's good to be here with you again. Always enjoy talking with you. And yeah, I've painted myself into a little golden corner for the last 42 years. That's what I do, is buy and sell physical precious metals and vintage US gold and silver coins pre-1933. So that's what I do. I've got a lot of experience in it and happy to help however I can.
Awesome. Well, I'm really excited to have this conversation. We did an event recently where we talked about, really why precious metals. And I know people that are listening to this or watching it on YouTube are just maybe not as familiar with it. Why would someone want to own physical metals? A lot of people, we think in terms of, if I have wealth, I have dollars, I have real estate, like why do I even need to consider metals as an option? Maybe you can just kind of get into the conversation around that and why people should own metals.
Well, gold and silver are the oldest, most trusted forms of currency or money in the world. Gold and silver coins have been money since ancient times. And until 1971, our money was backed by gold. But I should really say our currency is backed by gold, because money is something that has value, like an ounce of gold or an ounce of silver could be money. And that's what it was for 2,500 years of man's existence. A barrel of oil could be considered money. An acre of land could be considered money, but they're not very spendable forms of money. Currency is something we use to transact business with. It's a method of payment, but it doesn't have intrinsic value when they take the gold and silver out of it, like they did in 1933 for our coins in gold, 1964, our coins in silver, and the backing, especially of the dollar in gold in 1971 by Richard Nixon, when France didn't trust the deficit spending we were going through and an inflationary period we were going through. They wanted payment in gold. So gold started to go out of the country at an exorbitant rate, and Nixon had to do something to stabilize that. So he took us off the gold standard and devalued the dollar 10% in one fell swoop. And actually, we're going through a similar phase right now where we have, extremely large deficits, and we're in a new inflationary period, which we haven't seen since the 70s. And this is a time when, currency is going to lose value at the rate of inflation. And they're saying we might have 4 or 5% inflation this year when all is said and done. If you're getting 2% on a CD, that's really negative 3% real yield, which is gigantic. It's huge. And this could go on for a while. So if you have money in the bank, it's what your total value is going to be worth less, every month and every year by the rate of inflation. So savers are losers right now, as Robert Kiyosaki likes to say.
Yeah.
And gold and silver are one of the ways that you can hedge your financial portfolio against uncertainty or currency debasement, which is what inflation really is. And it's real portable wealth. Gold is easy to transport because it's a lot of value in a very compact form. You can hold 100 ounces of gold in your hand. It weighs about 8 pounds. Right now, that's about 110 $80,000 worth of value. You can literally put it in your pockets and carry it around very easily. Silver is bulkier, so it's harder to do the same thing with silver, but silver's also can be used as spending money or real currency in the event of a crisis. So I'm not saying that's going to happen, but I think we're in a period of time that's just, pretty challenging for people that want to have just cash in the bank. And assets are inflated in the stock market because of the Fed printing so much money. So I'd be a little dubious of trying to, chase that one higher, because the chances of it going lower are better than continuing to go the rate it's been. And our economy is starting to roll over a bit. We're going into a real more challenging economic period, probably the next couple of years than we've seen in a long, long time. And gold and silver are a good insurance policy for the rest of your money.
Right. You talked about a lot of stuff there. We're going to kind of unpack some of that, because I think it's really, really good. But right now, the goal the Federal Reserve has is 2% monetary inflation per year. You said that, we talk about dollars being money, but dollars aren't money, they're currency. So it just, there's been something like a 98% loss of the purchasing power of a dollar over the last 60 to 80 years. And so people say, oh, hamburgers used to cost 5 cents and now they're $5, whatever. Well, that's not that the hamburgers are more expensive. It's just there's more dollars out there and everything costs more. And actually what's happened recently is, the government in the last 18 months at the time of this reporting has printed 40% more dollars, or at least dollars in circulation, whether digital dollars or physical dollars. And they're giving them out in stimmy checks for people that aren't as wealthy. And then also with the business support stuff, like you have a business, I have a business, what will happen? Some people will take the government, PPP or the loans, and then get money from operations and be able to invest that elsewhere. So that also inflates assets as well, like you said. So and really this, you mentioned this as well, but in the period that we're in, it's either going to be that we continue to print money, which leads to perpetual inflation, or we stop printing money, but there's already so much money there. We have some crashes and different asset classes and things like that. But either way, people are going to start to say, where do I put my liquidity? Where do I put money that I need to have available right away? And that's really, I use it for insurance, kind of what you were saying. Like I buy metals for insurance in case inflation is going to happen, but in case it happens really significantly. But it also becomes liquidity. So I can basically, instead of just holding cash in the bank, I can hold it that way. Can you talk a little bit more about kind of what you see as far as some of the government trends and what's happening, and how you see that? Because again, people would say if there's more money printed, or if we get a stock crash, how some of those things positively or negatively affect metals, or is it just something you're looking at the long term, saying, hey, we got more dollars here. These coins, these bars are going to be way more valuable over time.
Well, gold and silver in dollar pricing, can be a bit volatile at times. If you look at a longer term chart, you're going to see that they just move higher over a very long period of time. But gold and silver tend to surge, and then they might come down, but they never come down as far as to the level they started at. They always reset at a higher price of support level. For example, from between 1982, when I went to work for Jim Blanchard early in my career, and 2003, gold was channeling between $300 and $500 an ounce that whole time. It could never really get over 500 and stay over 500. But in the 21st century, after we were attacked, 9/11, we just had the anniversary the other day, 20th year anniversary of 9/11. We went to war. We went into deficit spending. Gold got to $700, $800 an ounce, which was the 1980 high of $850. We got over that. And then the financial crisis came. Gold ran all the way up to 1900. Silver went from about $7 an ounce all the way to 50. And then we stayed high in the $1,500, $1,600 range, $25, $30 range for silver, until the economies got traction again, right? We had about a 6-7 year period where the economy was okay, but interest rates were abnormally low through this time, right? And that's another thing. The Fed is holding interest rates at an abnormally low level. Right, so money is cheaper than it should be. But now we've had another bout of problems with the pandemic. And, the bottom of this last cycle was 1,050, and where before it was 300. And now the bottom is holding at about 1,650. So gold is, when it hits a really weak period right now, the bottom is about 1,650, Today, we're almost $1,800 an ounce at $17.95. And I think the bias is towards the upside because our debt, in 2008 was $10 trillion. 3 years ago, our debt was $23 trillion. Now it's almost $30 trillion. And the government thinks that every time we have a big financial problem, they can just print more money to fill the economic hole that has been created. But they're not letting the businesses that need to fail properly so that the stronger can survive and the weaker can get knocked out. So it tends to create bubbles, which, Peter Schiff talks about a lot. And now that we're going through an inflationary phase for the first time since the 70s, I mean, most people that are alive today don't know what a really inflationary phase is like. But they're seeing it in the grocery store right now, especially. And I went to buy some steaks to grill this yesterday. And, I used to pay $20 for a nice steak here in Austin, Texas. Now they're $30, for a real nice steak. And that's not even filet mignon. So, food prices are up. We haven't really seen it in oil yet, but we'll probably see it. But basic materials are up. I'm rehabbing a duplex and my materials costs are 25 to 40% higher than they were 2 years ago for the same siding and flooring and shingles, if you can find it, So the inflation is nothing but a tax on wealth. And in an inflationary period, there's hardly anything that holds its value better than gold or silver. Plus, they're immediately liquid. A lot of real estate investors have equity tied up in their properties that they can't harness if the financial lending system doesn't work properly, which is what happened in 2008 and 9. If you have gold or silver as part of your portfolio, you can liquidate that instantly. So if there's a great buying opportunity and you've got just equity in a property, you may not be able to get it out fast enough. But if you have gold or silver, you can liquidate it immediately and get cash that you need to transact with. So
it really is true. The liquidity of metals is amazing. And also, I know we did our panel recently, which people can find on YouTube with yourself, Russell Gray, and Brian Lennon. We talked about metals, and Russ mentioned the precious equity strategy as well. That there are sometimes, most of the time, unless something significantly changed in the financial markets, you can actually borrow against the value of your gold if you have it with a third-party service such as TDS. And so you can actually borrow against it to get liquidity when you need it. So it is really great to be able to do that. Talk a little bit, some people think, hey, if I'm invested in an ETF, isn't that kind of the same thing as owning, physical metals? And what are some of the risks maybe of investing in an ETF?
Well, an ETF is an exchange traded fund where you can buy and sell, the price of gold or silver on paper. So there are a couple different options out there. There's GLD and SLV. There's the Sprott family of ETFs for gold and silver, which I would recommend over GLD or SLV. I like to use these when I think gold and silver are going to make a big move up or down in a very short period of time, like something's going to impact them, because it's an easy way to trade the gold and silver price movement and pull the trigger very effectively and have a very competitive buy-sell spread. Physical gold and silver, as I said earlier, are real transportable wealth. Plus, it's private. It gets your money out of the banking system, some of your money out of the banking system. Say there's a banking crisis. Say the government decides to do here what Greece did, which is give IRA savers a haircut to help pay for the national debt, which they did about 8 or 10 years ago. That could be a possibility in this country at some time in the future. If you have some gold and silver out of the banking system, off to the side, you've got it privately over here. But physical gold and silver are not as competitively traded as, say, a stock is or an ETF, because it's a physical product. A mint or a refinery has to make that 1 ounce or 10 ounce or 100 ounce gold bar or silver bar, whatever it is. It has to be perfect for integrity of purity and weight. There's shipping costs, there's transportation costs, manufacturing costs, and very small profits for dealers like me. We make 1 or 2% on gold. We make 2 or 3, 4% on silver when we sell it. We're not making a lot of money, but it's not quite as cost effectively traded as, say, an ETF might be. But with an ETF, you've got to make sure that they actually do have the gold or silver to back it. And there have been some questions whether some of these ETFs actually do have the physical gold or silver that is supposed to be backing them. With the Sprott family of ETFs, I wouldn't worry about that because they're one of the best names in the business and they're professionals.
Yeah, no, I think the Sprott family, we're actually having Rick Rule, who's with the Sprott. I don't know if he's with them. I think he's still involved, but he is an amazing guy. And so basically they, it's like a 1-for-1 type of ratio,
Right.
or it's very specific versus I think some of the other ETFs, they were, 10-to-1 or even, 20-to-1. There was some changing even when they had during the pandemic, they had a physical shortage of metals. And so they just kind of said, oh, we're just going to kind of temporarily let it float. And then of course, that's not really a great recipe because then there's a rush for getting the asset. Who owns it? Like, nobody owns it. So the idea of having, yeah, exactly. So having metals, and then we'll get into that a little bit too. Maybe we'll talk about, where people store this stuff, but talk a little bit about some of the choices for people starting out, some of the different options, or even what you recommend for somebody who says, I'm totally new to metals. I know I probably should buy some. Like, what should I buy? What are some things that I should look for in buying? Like, what sort of coins or bars, or what should I buy?
Well, most people, when they think about gold and silver physical product, they think of bars. But over the last 30, 40 years, actually, private refinery bar products have been supplanted by sovereign minted products. The Royal Canadian Mint has been making Canadian maple leaf since 1978. The South African Mint's been making 1-ounce gold Krugerrand since 1967. The US Mint got into the business of making gold eagles and silver eagles in 1986. You've got Austria, you've got Australia, you've got China, you've got Singapore. All these different countries make gold and silver 1-ounce products that are very competitively priced. Some have some advantages for taxing that others don't. But in the US, we do 90%, 95% of our physical business in 1-ounce US gold and silver eagles. And our second most popular product are Canadian, Royal Canadian minted 1-ounce gold and silver maple leafs. Now, the US Mint is not quite as effective at producing a volume of these coins as the Royal Canadian Mint is. So the premiums on the US gold coins and silver coins are a little bit higher than the Royal Canadian Mint maple leafs and are. But with gold and silver eagles, you get tax advantage that you don't get with a maple leaf and gold when you sell it. If you sell me 25 ounces or more of maple leafs in one transaction or related transactions, then I have to report my purchase from you to the IRS on a 1099-B like you would sell a stock. So that transaction is not a private transaction. That's 25 ounces or more that you sell to a dealer like myself. Less than 25 ounces is not reportable. But with gold eagles, that's not a reportable transaction. You can sell me 100, you can sell me 1,000, you can sell me 1,000,000. It doesn't matter. I don't have to report it to the IRS.
Right.
And that's kind of a loophole that's been in the law since 1986, and they could change it at any point in time. But that's the way the law has been for 45 years now, 35.
Right. So there's some tax benefits considering, but it sounds like coins are more popular, and then bars are another option as well that people use.
Yeah, the coins are really just round bars minted by a sovereign mint instead of a private refinery. And the other issue is we're seeing a growing but small amount of Chinese counterfeit gold and silver items coming into the country. And they're able to counterfeit the bars more readily than they are the sovereign minted products because the bars have a less intricate designs on them and they're more easily replicable. When I was president of the Professional Numismatists Guild, in which you alluded to before, I'm a member of the P&G. We'll talk about that a little bit more in a moment. I helped to establish the Industry Anti-Counterfeiting Task Force in 2016, which now works with Homeland Security and Secret Service to interdict spurious product coming in to the US, primarily out of China. And you also see some of this stuff on some of the online auction platforms or some of the private places where you might buy and sell things on the internet. I'm not going to name names, but you know what I'm talking about. And if you try and do transactions in some of these places, the chances are that deal that's too good to be true really is too good to be true, because you might get a fake gold coin or a fake gold bar, where with the sovereign minted products, it's much, much harder to replicate that.
Yeah. Yeah, no, that makes sense. There's, finding a reputable dealer is really important that you're working with. That's, huge because you know that you're getting real stuff and there's a lot of reputation and relationship that goes with that as well. Talk a little bit about some of the challenges of owning physical metals and storage and kind of how that works. So if I buy a bunch of, like I have physical metals, like what are some ways to store that in an effective way?
Well, in the past, we would say put it in a bank safe deposit box. It's the safest place to put it. But we really can't say that anymore because the bank safe deposit box charters are sometimes specifically saying in the small print, no coins, allowed in the safe deposit box. And if there's a banking holiday, you want to be able to get to your metal. So you want to be able to store it where you can sleep at night knowing that it's safe and also have access to it in the case of an emergency. And it's a little challenging sometimes. So gold is very compact. Like I said, you can hold 100 ounces, $180,000 worth of value in a very small space. You can hide that in a house pretty easily. Silver, that same amount of silver, you're going to have a big pile of it. It's much harder to hide. But, in my old house, I had an in-ground safe put in when I was rehabbing it. I don't live in that same house anymore, by the way. But you could hold, put hundreds of ounces of gold in that in-ground safe, and you can get private insurance for that. So I have a safe company that I recommend if people are interested in that. Some people bury this stuff in their backyard, which isn't always the best way to go, but that's one way to do it. But there are also private storage facilities that are not affiliated with banks. There's not a lot of them, but there are some good ones around the country where you can store your metal. It's fully insured. Some of these facilities offer a segregated account, which means your metal is your metal. It lives alone by itself on a shelf, and it's accounted for, every time they do inventory. Some accounts are unallocated, or not segregated, where your metal just goes into a pile of like stuff for everybody else in the place. I don't like those kind of accounts because you could have someone send in 1,000 pristine 1 ounce silver eagles, and then another dealer might submit some that are not so pristine. And then when they go to sell them back, you might get the bad batch as opposed to the good batch. And by bad batch, I mean, somebody mishandled them. They got scraped up a bit. There's still good ounces of silver, but you're not going to get the premium back that you paid for them.
Right.
So we have a list of storage facilities I can share with you. There's about 10 or 12 around the country. There's a couple big ones, one big one on the West Coast, one big one on the East Coast. And there's some smaller ones, in Florida, Texas. There's a good one in New Orleans called the Security Centers. So there's some options, but it's a bit more challenging. But the rule of thumb is be able to sleep at night and have access to it when you need it. And if you want private insurance for your precious metals, we can recommend an insurance company or two that specialize in this niche. Because if you go to State Farm or Allstate, they're going to quote you a higher premium that you have to pay for this kind of stuff.
Right. One other thing you mentioned is safety deposit boxes. If people want to keep them there is a way you can insure the safety deposit box as well, right? But it's just the issue is access, right? If there was some sort of banking issue, that's the primary risk there, right?
Right. You can get insurance on whatever you put in your safe deposit box with an insurance company. And that's the kind of position that actually insurance companies like, where metal is behind a good, safe vault door and it doesn't move.
Right.
I know it's just going to sit somewhere that's safe. The insurance policy premiums are low, but that's what some of these private facilities do. Is the same exact thing. They're just like safe deposit box as in a bank, only they're a private facility.
And then you have access in case there's an issue with the financial sector and stuff like that, which is great. Talk to us about if somebody wants to find a good dealer, what things should they look for in somebody who, obviously doing online marketplace stuff is probably not the best way to find a metals dealer. What's a good way to find a good metals dealer?
Well, we are an unregulated business, which means anybody can be a precious metals dealer tonight, tomorrow, the next day. And we do have opportunists that come into the market when the market's good, like we're in a better market now than we were 3-4 years ago. So we're seeing some pop-up dealers, and some of these people don't care about their customers. They're just in it for the short term to make as much money as fast as possible, which is why it's best for you to find a dealer this is their profession. They've been in the business a long time, and they have a good reputation. So I'm a member of the Professional Numismatists Guild. I'm a past president of the guild. We have to abide by binding arbitration in the event of a dispute, have a good reputation within the industry, and be financially secure. These are requirements to be a P&G member. So if you're looking for a precious metals dealer, I would highly recommend that you find a Professional Numismatists Guild member, because we are the leaders in the industry and we are vetted by the organization to be P&G members. And this is our livelihood. Okay, if we get a good customer, we want to keep them. Right now, I'd love to have everyone's business myself, but I'm one of about 350 active P&G members today. So they're all over the country. You can find them. There's a little logo that we have for Professional Numismatists Guild. So look for the logo and do online searches for, reviews, and look at ripoff reports, and see, who's got a good reputation and who doesn't. That's not always going to give you the truth of the matter, because I've seen some spurious companies, rate themselves. It happens once in a while.
Right.
And don't fall for television advertising. Most of the TV advertising you see with the celebrity spokesman, those are the kind of companies that are not going to treat you quite as well as some of the true dealers who are long-term dealers in the marketplace, which P&G member dealers are.
Dana, what's a way that people can, read more or get more information about investing in metals? Or maybe you have some resources available, or just any place you could direct people to that they can learn more about all of this.
Well, we have a getting started guide that we can send you, which kind of goes through some of what we talked about and some of the products that we recommend and why we recommend them. As I talked about the tax implications for selling maple leafs over gold eagles earlier. So I can email that to anyone who might want it. And learning about precious metals, it's pretty simple. I mean, there's really not a lot of good books that you can learn about. There's a bunch of YouTube videos that are, with Zoom over the last couple of years, and especially during the pandemic, there's a lot more content on YouTube than there's ever been before. But you really want to go with someone who's been in the business a long time. If someone's just been in the business for a few years, or their website doesn't tell you who is behind that company, I mean, that's a classic sign of a company that says, we've got 40 years in business with our 5 employees. It could be 10 telemarketers that all worked for one company for 5 years, and then they decided to start their own firm. They really have no expertise other than selling, right? That happens. And there's 3 or 4 companies like that out there today. Yeah. So look for a long-standing member of the community, basically. And look at price charts. Our website has gold and silver price charts that go back about 25 years. You can see what the price of gold has done and silver have done, year to year. And if you match that up with the economic conditions, you'll find that gold doesn't do that well when the U.S. economy is doing great. But when things are problematic, gold and silver can do very well, especially in an inflationary environment. And I don't think gold and silver have reacted fully to what we're going through yet with the pandemic, specifically regarding the debt that we've taken on, which is another $6 trillion in debt over the last 2 years, if I've got my numbers right. And now inflation to boot at the same time. I think gold and silver could easily be higher in dollars over the next 2 or 3 years by a substantial amount if things pan out the way I think they will. So
that's really absolutely true.
Hedge.
Yeah, absolutely. Well, Dana, this has been really great. I wanted to have people get to know you, and just I've appreciated over the years your attitude towards just kind of common sense and education, and just helping people understand that haven't invested in metals before. I know a lot of our listeners will really benefit from this conversation. So really appreciate you doing that and just being a stellar guy. So what's a great way for people to get in touch with you?
Well, our company's American Gold Exchange. We're a national mail order dealer. We're in Austin, Texas. Our website is www.amergold.com. It's right above my head there.
For those that are watching this, you'll see it. If not, it's just amergold.com.
Yeah, AMERGOLD.com. And the general information email box is info, INFO, @amergold.com. Our website is designed to help people understand easily the basic products that we buy and sell, our pricing, our methodology. So it's easy to navigate and information rich. We don't have 1,000, 2,000, 3,000 products listed like some companies do. We focus on the bread and butter, most basic coins that most people are going to want to own, buy, and sell for liquidity. You know, if you have a 100-ounce silver bullet, which you can buy, 100 ounces of silver in a bullet form, that's a little bit harder to sell than, 101-ounce silver eagles, because you got to find the next guy that's going to appreciate that it's a bullet.
But then you could say you have the silver bullet, though.
Well, that's true.
So, awesome. Well, Dana, thanks so much. I really appreciate you coming on the show today.
Thank you, Bronson. It's always great to see you. I really appreciate it. And thank you for my little friend over my shoulder here.
Yeah, I got your little bobblehead that looks just like you. It has the same jacket you're having on. It's a lot of fun. So thanks again, Dana.
All right, Bronson, great to see you. Thank you so much for having me. I really appreciate it.
So this was a great interview. I really like talking with Dana because he has a real emphasis on educating people about why they should have metals in their portfolio. This is actually an episode or a show that you should consider sharing with someone else if you got value out of it. Because if we get to a time where there's high inflation picks up much more than it is right now, having some resources invested in things that are inflation hedged, such as precious metals, can really help you. And I'm not incentivized at all to share this with you. I'm not endorsing Dana or his group, but just the fact of having reputable people that work in the space that can educate individuals about precious metals, I think is really, really important. So I think it has a place in every investor's portfolio, a certain percentage. The thing, I'm a former investment advisor. I'm not one now, so I can't tell you what you should do. But common allocations are sometimes 5-10% of someone's total net worth or more, having it in some sort of precious metals. And I have a bias towards investing in actual physical metals because it is outside of the banking system. So I hope you got some value out of this. We'll look forward to the next episode, and I hope you have a wonderful day. We'll see you on the next one.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.